Hi students, welcome again to video lectures of consignment accounts, Unit 2 of Financial Accounting 2. Last videos we discussed about those videos we understood about introduction, journal entries, accounting procedure of total stock sold and unsold stock valuation. So now the third concept which we are going to learn in this video is invoice price. You'll understand what is invoice price. Okay, students. Last video we understood valuation of unsold stock. Which method we follow is only unsold stock portion calculation we follow. Cost of goods unsold plus proportion of consignor expenses and consignee direct expenses. For this, we pass one journal entry, consignment stock accounted at goods and consignment. So this is the procedure or format we use it to calculate unsold stock. This is last video. Okay, 2 problems we practiced. Remaining problems you try here. Next, there are 3 methods of accounting, that is cost price method, which we completed, invoice price method, which we are going to learn in this video. Another one is a memorandum method. Okay. So invoice price is the cost price plus loading. Cost price plus profit. Okay, that is called loading. Now I will explain what is the invoice price. Goods are normally sent on cost price to the consignee. That is 100%. Okay. Consignor will send goods to consignee at cost price. Last 4 or 5 problems in those videos, goods are sent on cost price only. But sometimes the consignor makes the invoice at the selling price. That is pro forma invoice price. Next, in sometimes what the consignor will do, he will prepare invoice at the selling price. He prepare the invoice at a selling price. That is called pro forma invoice. The idea is that consignee should not know the actual cost of the goods. Suppose cost price is 100 and consignor asks the consignee to sell for 150 rupees. Consignee will know the difference between cost and selling price is 150 rupees. So for each unit, consignor is gaining 50 rupees. He will know that. So instead of knowing the exact profit in each unit, consignor will make the invoice or selling price, adding the profit also. That also we look at here. Invoice price is equal to cost plus profit. 100 rupees is the cost plus profit is 50, 150 is invoice price. So in such cases, the entries are made by the consignor in his books at invoice price. So consignor, first he will send goods to consignee or not. At what price he will send? Invoice price. Invoice price is including profit or not. So that's why to know the exact profit of goods sold, first they will record at invoice price, then later they will reverse the invoice price into cost price, or they will write the difference between cost price and invoice price, reverse entry. But for ascertaining a profit or loss on consignment, the sale proceeds must be compared with the actual cost. Goods are sent at invoice price. Now we want to compare the profit on cost. We have to convert them into cost price by writing the journal entry, reverse journal entry, that is goods sent on consignment account to consignment account, to change the invoice price to cost price. Therefore, every item appearing in consignment account at invoice price must be suitably adjusted so as to reduce to the cost price. So invoice price to be reduced to cost price. What is the first journal entry? Consignment account data to goods sent on consignment. 150 rupees according to the example which was given. So first journal entry, consignment account data to goods sent on consignment. Consignment account data to goods sent on. This is invoice price. 150 is invoice price. Consignment account data to goods sent on consignment 150 rupees. Next we have to write goods sent on consignment account data to consignment account reverse entry. So that is for 50 rupees. 150 minus 50 is equal to cost price. So what we are doing by writing second journal entry, 150 is reduced to 100 by writing 50 rupees as a reverse journal entry. Okay. Right. Now, so the process of adjusting invoice price to the cost price is termed as unloading. 50 is added by the consigner. Now we are unloading the 50 rupees to made it as a cost price. So the following additional are made in the books of consigner to effect the unloading. So goods sent on consignment account data to consignment account. Difference between invoice and cost price. For unloading the difference between cost and invoice. Only extra this entry. This is for stock reserve. So usually in these videos we are calculating stock at cost price only to avoid such confusion. Okay, stock reserve and this confusion. Even though goods were sent to consignee at invoice price, but we are calculating unsold stock at cost price. Unsold stock at cost price. Okay, students. So only this entry, goods sent on GSC account data to consignment account. This entry will be written to unload the invoice price to cost price. Now we will go to Excel. Problem number 7. Problem number 7, 9, 10 are the problems which we choose to understand this invoice price. So first I will read the problem. In your textbook, please go. H Limited forwarded on 7/2006 100 bicycle to Vasu of Hyderabad to be sold on behalf of H Limited. So H Limited is consigner and Vasu is a consign. H Limited is a consigner, Vasu is a consignee. I will make it white color. Consignee we are making to white color. Right. Next account also will make it. All right. So consigner is name of the consigner is seventh. H Limited is consigner, Vasu is consignee. H Limited is consigner, Vasu is consignee. Will change when we are doing accounts. 100 bicycles were sent. The cost of each bicycle was 150, but it was invoice price is 200. Cost price is how much? Cost price is how much? Cost price is 150. Invoice price is 200. Price is 200. So according to the consignor, selling price may be 200. Okay. So more than the 200, consignee has to sell that one. So what is the difference between cost price and invoice price difference? Difference is 50 rupees. 50 rupees. So first entry we have to pass for 200, second entry for 50 rupees to bring the 200 to 150. Okay. Right. H Limited incurred 1000 on freight and insurance. 1000 is consignor expenses. Vasu received the consignment on 14/7/16 and accepted a 3 months draft upon him by H Limited for 10,000. So 10,000 is for advance. Vasu paid 400 as rent, 250 as insurance, and has disposed 80 bicycles, 205 each. So Vasu is a consignee. Consignee expenses are 650. Goods sold. Sales are sent. Cycles sent is 100. Cycles sold is 80. Unsold is 20. Unsold is 20. So in this problem, we are also having calculation of unsold stock. Okay? Unsold stock. 80, 205 each. Vasu is entitled to a commission at 5% on sales, including the literary commission of 1%. Total commission is 5%. In that, 1% is there. So total commission, normal commission 4, delivery commission 1. Total commission is how much? 5%. And Vasu sold 20 bicycles on credit and it was not able to recover the sales proceeds of 5 bicycles because of insolvency of the debtor. Why the delivery commission is giving to collect the credit sales? So H Limited is providing the delivery commission 1%. The risk of collecting the credit sales amount is there with the Vasu only. So it is not affected. 20 cycles credit and 5 cycles amount is not affected to the consignor because he is paying delivery commission to collect the credit sales amount. Now we will come to journal entries part. Consignment account related to goods sent on consignment, 100 bicycles at the rate of 220,000. Invoice price is how much? $200. And here the difference. Difference we have to find out. 50 into 100, 5,000. From where I got 50 difference. Okay. So invoice price 200 minus cost price 150 is equal to 50 into how many cycles? 100 cycles. Now consignment account here showing 20,000 and here consignment account credit showing 5,000. So consignment account debit will be 15,000, that is equal to 100 into 150. So 2,000 we are making into 15,000 by writing 5,000 rupees credit. That is difference between cost price and invoice price. Right. Next, consignor expenses 1,000. H Limited incurred 1,000. for consignor expenses. Now advance 10,000 rupees BYR account return to Vasu account. Amount advance is 10,000. BYP accepted. H limited account return. Bills payable account. Amount is 10,000. Right. Next to consignee expenses. Entry is a consignment account return to Vasu account. This already you know from the earlier problems. Okay. Simply remembering the procedure and posting the amounts. 650 I think. Consignor account return to cash account. H limited account return. Cash or bank account 600. Next sales. Vasu account return to consignment account. So amount we will calculate using Excel 80 into 205. 16,400. Okay. 80 bicycles sold by consignment. Here, bank debtors, cash or debtors account return to H limited account. Some of the items are sold for credit. Okay. The amount is 16,400. So 80 cycles at the rate of 20. Now commission 820. Commission is 820. 16,400 into 5%. Consignment account return to Vasu account. You can check the calculation. Is equal to 16,400 into 5%, 0.05. Correct? Right, correct. Here, consignor account return to commission account. H limited account return. Amount is 820. Right. Unsold stock is there. We calculate unsold stock. How many are unsold? 20. What is the cost of each cycle? Each cycle cost is 150. Okay. So we'll calculate unsold stock per cost price. Unsold stock 20 cycles. At the rate of 150 each. 3,000. Consignor expenses are 1,000 into unsold is 20 divided by 100. Amount is 200. There is no consignee direct expenses. 3,200. Okay, we'll pass entry per consignment stock 3,000. Right. Now posting. Okay, only invoice price only we are getting. Remaining all are same as it is. Okay. Consignee name is Vasu. You have to be perfect in this consignment because you are already having intermediate, and here one advantage is to refer the answer which I prepared. Consignment account related to goods and unconsignment 20,000. And in goods and unconsignment by consignment amount is 20,000. Now special entry we passed, that is a reverse journal entry for reducing the goods and unconsignment to invoice price to cost price. That entry is GSC, goods and unconsignment account related to consignment. Goods and unconsignment account related to consignment account. So first we will go to GSC account to consignment. Amount is 5,000. In consignment account, credit side by GSC. Only this change, that's all. The remaining everything is the same like earlier problems. GSC 5,000. Right? Next, look at your textbook, the notebook. Consignor expenses to cash 1,000. Consignee expenses to Vasu 650. Sales by Vasu. Look at your notebook. If you note down and follow, then only you will understand these practical problems. If you are treating it as a video lecture, then you can understand. Simultaneously, you have to follow me, then only you can understand. 16,400. And Vasu account data to consignment. When you follow this one, you try one problem, whether it's not told correct or not. 100% you will gain. Commission Vasu account 820. Now unsold stock is a high consignment stock. $3,000. Entry 24,600. 30. 22,600 and 2,000. 24,600. Profit is 130. Check. Here. Yes, profit is 2130 and value of stock at invoice price 4,200, but cost price is 3,200. So when we write invoice price, we have to write a stock reserve for 1,000. To avoid such confusion, we are calculating unsold stock at cost price. Okay, now we will record the profit. Consignment account, profit and loss account 2130. Right. Now we will close Vasu account. Vasu account, we forgot to enter by its payable 10,000. by consignment. Amount 650. Expenses, consignee expenses by consignment, 820 commission. You check all this in these 4 journal entries, you will find VAS. Okay, right. This is also 479. Right, by bank. Yeah, for that also we had a journal entry. That is bank or bills received 4930. 493. Entry is bank account data to VASU account. So same amount consignee is paying to whom? H Limited. Consigner. Consigner account data. Bills payable account. 4930. Here also 4930. Okay. Now to purchases account. Purchases are trading, whatever it may be. Okay, now you can write. So here 15,000. Earlier our GSC accounts are only with the value of cost price. Now also cost only we are transferring to purchase account. Invoice price is how much? 20,000. Loading is how much? 5,000. It is unloaded by 5,000. Then the value of cost price is 15,000. Already we prepared the entry for that. Just posting the 15,000. Consignee will be the same as it is. Consignee is you don't know anything. Okay, na? Simply you will record only few items. That is consignee expenses, commission, sales, advance, repayment. That's all. Not more than that. So H Limited consigner name. H Limited account data. Bills payable. $10,000 to bank. Consignee expenses 650 to commission. Amount is 820. You have to post in by H Limited. Commission account. 820. Sales we have to write by bank. Debtors. That's a 64. And here last entry to bank account 4930. Same tallied. Only commission we have to transfer to which account? To P&L. Amount is 820. We'll close this account. Simply we'll pass entry here. Commission account letter to P&L. Amount is 8. Commission transfer to P&L. Okay, students, that is problem number 7. Okay, we check the timings and okay, so 30 minutes are over. One problem per 30 minutes. Please check only the extra we did here is we take a difference between invoice price and cost price. The difference we passed a reverse journal entry GSC account data to consignment account. That same was posted here to bring the invoice to cost price. So we got to 2130 is the profit on cost. Profit on cost. Okay, students. By next video, we'll go for problem number 9. Bye, students.